What is going on, guys? Welcome back to the Young and Intelligent Money Investing channel. We knew February 1st was going to be a huge day for earnings. We just got Apple, Amazon, and Google out. I'm going to be breaking down the numbers, telling you guys what I think. But before we get into that, I want to ask you guys to please drop a like on this video, subscribe if you haven't already, and let me know if you guys are invested in Apple, Amazon, Google, all three, a combination of the three, whatever you guys have got. And now let's get into these numbers. So Apple has been going through a really bad week. Look at this. It's really been down ever since the report broke that their iPhone X sales and production was actually halved. There was a report that their production was halved earlier in the week, maybe about a week ago, and everybody was speculating that that was going to lead to a big downturn for their profit for the fourth quarter because, as we know, iPhone X was going to be a big thing for them with their new $1,000 price point. But even with the lower production and lower sales, they still were able to boost up their revenue just because of that higher price point. And for Apple, this is why they diversify. They aren't just stuck on the smartphone sales and like pretty much only tied to that. They got crushed all week because of those lower smartphone sales. They didn't have quite the profit that we were hoping for from the iPhone X sales. That's all right because they just made up for that. And one of the things that was cited was the AirPod sales and the Apple Watch sales. I was telling you guys about the AirPods a few weeks ago. I thought that was going to be a huge revenue booster for them because it's like $180, and I see just everybody has these things now. So that's kind of what my thoughts are. They're a really great product, and they work perfectly with Apple devices. So those are great revenue sources. They also have the watches, the Apple services for apps, stuff like that. So they came in with $88 billion in revenue and $20 billion in profit for the fourth quarter of 2017. Now let's see what the shares did after hours. So right after hours, they took a quick dip for some reason. Kind of the first couple minutes after the numbers come out, it's usually kind of random if they go up or down. And then it made a huge reversal up to about 3.5% up after hours. Now that'll pretty much get our losses back in the week, which is great. There's still a little bit of concern in the market of Apple being able to sell those iPhone X's for their high price. So that's why I don't think it exploded after this earnings report, but still did a great job, and I'm happy with how Apple's done. They seem to always be under-promising and overperforming, which leads to a bunch of big boosts on earnings reports, so I'm very pleased with that. Now let's talk about Amazon. Amazon broke $1 billion for the first time on profit for a quarter. Now, there are two things that they cited the most for this were growth for cloud computing and advertising services. I don't know as much about Amazon products, but obviously throughout the day there was a lot of concern that they were going to disappoint on their earnings reports, so there was a lot of selling. Down as much as 4.3%, then spiked right back up 6.2% after hours. Amazon crushed it on earnings. I really wish I would have stayed in the stock. If you guys look, I made a one-day trade. I bought in at 965 or 967, sold out at 965 because I decided, you know what, I really don't want to have this much of my portfolio in one single stock, and I've left $500 profit out on the table. Sadly, if I would have held on to it, I'd be up $500 more than I am right now, and actually a little less than that because I put the money in other stocks that have gone up in the meantime. Lastly, that I want to talk about is Google. Google had actually disappointed on on their uh, their earnings report today. They hit on revenue but missed on profits. One of the things they cited for this is that if you guys remember a couple weeks ago, there was a big news story that Google was bringing some of that really big overseas cash pile back to the U.S. and having it taxed here. So for that reason, it's taxed at a higher rate than if they just let it sit overseas. So they lose part of that comes out of their profit for the quarter. And another thing that Google's been having trouble with is, if you guys didn't know, they do own YouTube, and they've been having a lot of trouble with the revenue from YouTube with other advertisers. So they're really trying to revamp their whole program, and they've been demonetizing so many things. So just on accident. So going forward, I think this is going to take their revenue is probably going to take a little bit of a dip, at least from their YouTube source, just because they're demonetizing so many of the smaller creators. But that's going to allow for higher priced ads on the like larger creators with verified good content, advertiser friendly content. So it's going to allow them to match advertisers to their content creators more and have more of a kind of connection between the ads and the content that's being put up. So I think Google's going to be fine in the long run. For now, they're down 2% after hours. Really not a huge deal. Not the best if you're a Google shareholder, but that's all I've got for you guys today. Please drop a like down below. Tell me what you guys thought about these earnings report. If there's anything I missed, drop it down in the comments to start up a discussion. What you guys think about three of the largest companies in the world, all their earnings reports on one day. I think this is going to be a good sign for the market going forward, but we will see. Let me see how something like SPY did after hours. Up 0.18% after hours, so not a huge swing. But I think we'll probably see some of that residual effect come in tomorrow, maybe, or in the coming weeks. So I will see you guys next time. Thank you guys for watching.